Hey guys, this is Jim. This is Monday, June 13th, 2011. Hope you all are doing well out there. This is a video chart presentation on NWGC, which is New World Gold Corporation, traded on the pink sheets. And again, this is the 6-month chart, is the logarithmic scale, so it's been kind of compressed here, so that's why it looks a little skewed, but this will still work out fine for us. Let's go ahead and point out a couple of trend lines here. As you can see here, we've had a nice increase in the price per share. We've had higher lows, a little bit steadier on the highs, but we've also had higher highs, especially in the last couple of sessions or so. And we have this sort of this ascending triangle forming, so that's kind of a bullish sign to look for when you see that type of formation. RSI is looking kind of nice here too. It's right here close to the 50 mark. It closed at 49.28. Again, we have some nice strong buying, some news, whatever this week. You might expect this to cross over and head into the power zone, because historically the stock has been in that power zone, especially with this last tremendous rally back around the first of the year. The slow stochastics are showing some nice signs here of life as well. We had this tremendous sell-off back in late May, and since then we've had a nice increase in the slow stochastics. We had a crossover, and it looks like right now it's starting to kiss each other again and diverge. So typically when you see that, you might expect some movement to the power zone, which would indicate, of course, an increase in the price per share. We've had a nice steady increase here. I mean, look at this, guys. I mean, the whole time here, just a nice steady increase in your accumulation distribution graph. Lots of accumulation going on here. Someone's definitely been picking up shares for quite a while, so that's always a nice bullish sign to see that, and plus, of course, the volume. Now we've had a nice increase in volume, so we're bringing some liquidity back in the stock here, and that's something else you want to see in the stock, is liquidity, obviously. So we have some support and resistance points here. The 50 DMA is at 0.094. We did close a little shy of that, so technically speaking, 0.094 is a point of resistance. The 200 DMA is up a little higher at 0.136. Of course, that's skewed a little bit because of this tremendous rally, above 40 cents back in around the first of the year or so. But cross over that, doesn't look like 0.94 is too bad as far as breaking through. Certainly, let's look at some lines here. Certainly, the 10 cent mark is going to be one point of resistance, because just 10 cents, it's a psychological number. We also had a previous rally hit 10 cents and go down from there. But other than that, it's a pretty weak point of resistance. Support, though, looks pretty tight here. Roughly about let's go about 8.5 cents on the support. So from 8.5 cents to 10 cents, you have a nice tight range. And you know what, guys? When we have that tight range, it's actually not bad, because a lot of times you can see tight ranges like this, and then once it breaks through, then all of a sudden you have tremendous buying coming in. Depending on what's happening, of course. Beyond 10 cents, we've got, let's see here. Looks like we've hit this mark a few times. Looks like about 11 cents here, roughly. And then beyond that, we hit this mark here about, oh shoot, it's kind of funny. It's right there, almost right at the 200 DMA at 0.136, 13.5 cents roughly. So, and that one's really kind of a weak level. The 11 cents is a little bit stronger, so once you get through to 10, you want to kind of keep an eye on 11 cents. So depending on what's going on there, you just want to make sure that you pay attention to your support and resistance levels. So again, we'll just have to keep an eye and see how this stock performs this week. And again, I did want to remind you, I hope you enjoyed the video presentation, but did want to remind you that the information contained herein has been compiled from sources deemed reliable and is accurate to the best of my knowledge and belief. However, I cannot guarantee as to its accuracy, completeness, and validity, and I cannot be held liable for any errors or omissions. Furthermore, I'm not an investment advisor nor a financial advisor. No information provided here is to be interpreted as a suggestion to buy or sell securities. Hope you guys enjoyed the chart. Have a great week, and we'll talk to you soon. Bye-bye.